YouTube, how's it going? Change of style of video today, but basically this was taken from my mastermind I hosted back in November in London 2024. But long story short, it's currently Friday the 17th of January. I'm 10 and a half years into my trading journey. I just thought I'd make a video on this because if it can provide you guys with any helpful advice and education to save you the headache, because I know a lot of you will be 1, 2, 3, 4 years in. There's some major lessons here that I've sort of put together from the last sort of 10 and a half years that I think you'll find incredibly valuable. So let's get cracking. So number one, sitting on your hands. It's a skill and it's a term you've all heard of, I'm sure. But what I mean by this is there'll be a lot of time when there's impulse to enter the market. There'll be a lot of time when you're wanting to execute positions that aren't quite there, or you need one or two pieces of confidence to play out first, or a price to reach a certain level first, or to see confirmation in terms of entry criteria. But a lot of people will just try and jump the gun because they think they're going to miss the trade, and it comes into that FOMO. So sitting on hands is incredibly crucial. People might disagree with this, but I would rather I wait for price to get to my area of interest, because that area of interest is highly confluenced and it's my edge, it's my strategy. And if it doesn't get there but still plays out in my direction, then so be it. The trade has been missed, but the direction is right, but it didn't come into my optimal area of interest. And my optimal area of interest as well obviously means it's an optimal risk to reward as well. So I'm happy with that. If that doesn't, if the trade goes on without me, it's better to sit on your hands and execute at the price and the edge, the area of interest that meets your edge and meets your data and your criteria. Number two, emotions are the fastest way to an empty account. That is, couldn't be truer, if that's even a word, truer. I see it all the time with traders that I work with, and where they've come to me off the back of huge amounts of heartache, where they've gone into a 2, 3, 4 losing streak, and I wouldn't even call 2, 3 trades a losing streak anyway, but it really messes with them psychologically. And then they're jumping into the next trade and a setup that's not there, a setup that's not optimal, and then they take another loss, and then they increase their lot size to make back the 2, 3 losses they've just had, and then they take another loss, and before you know it, you're 6, 7, 8% down. That's if they're obviously risking 1%. A lot of these people, where they're sort of emptying their accounts, they're risking a lot more than 1%, and it's suicide basically. So it's so important that there's another video I've done this around emotion, so go check that out. It's from a couple of weeks ago. But you have to have them in check. You have to align yourself in that sort of neutral spectrum, whether you have a win or whether you have losses, okay? Because both wins and losses evoke different types of emotions, and it's not just losing streaks that can empty an account. Winning streaks can empty an account because you're on a great high, you're extra confident, you're feeling brilliant, and then you over leverage and you take a huge hit, and then it spirals you into that losing streak I just talked about. So you've got to go for that neutral, level-headed sort of mindset where you can, and it comes with time, it comes with experience. So number three, thinking in months and quarters, not weeks or days. I couldn't be truer again. You are going to have losing weeks, of course. You're definitely going to have losing days. But what's important is how that monthly P&L looks, how that sort of quarterly P&L looks, how that yearly P&L looks, okay? Because you might have 2 losing weeks out of 4 in a month, or 3 losing weeks out of 4 in a month, but you can still be profitable that month. You can still be profitable that quarter. And traders hold too much. They weight too much emotion. They hold too much emotion to daily P&L, weekly P&L, and then it skews into the week after that, because you're carrying over this negative mindset or this emotional mindset from the previous week that may have been a losing week. Try not to think like that. Think about monthly P&L, think about quarterly P&L. I say to all my traders, all my mentees, if you can make 3 to 5% a month, obviously on big amounts of capital, which we scale them up to, but if you can make 3 to 5% a month consistently every month, you are a fantastic trader and you're in the top 1% of traders, okay? So do not be swayed by all the noise you see online preaching a lot more than that. Number 4, consistency and discipline is not sexy. And it isn't. Trading should be mundane. It should be boring. Again, I've done another video on my YouTube in full length on this from a few weeks ago, but it should be boring. It should be systemized. It should be, it shouldn't be exciting. If your trading is exciting and it's a roller coaster of emotions, something's off, or multiple things are off. You're not position sizing properly. You're putting too much emphasis on each trade and the outcome of each trade. You're not focusing on what matters around probability, risk to reward. It should be very mundane, very boring. You should be able to go days or even sometimes weeks without not taking anything. And that's the nature of the game, okay? The market's not always going to present you with daily opportunities, not even weekly opportunities. You might get 5, 6, 7 good trading days a month, okay? And that's normal. That's healthy. Get used to it. Number 5, biggest enemy is you. Again, really, really important. A lot of self-sabotaging goes on in trading, especially when we're on losing streaks. You have to get that in check. And, you know, I won't go into it on this video because it'll end up being a massively long video that you guys aren't going to watch. But, you know, you have to keep that in check because, again, with multiple factors like risk to reward, multiple factors like position sizing, it's going to be okay if you have your edge. You will still be profitable. But as I mentioned earlier, when it comes to point number 1 and 2 on this video, people let the emotions start spiraling. So they are level-headed initially, and then they start spiraling. And this is then, again, when it leads to those really negative behaviours, again, around FOMOing, over-trading, seeing things that aren't there, forcing positions that aren't there, scaling into losing positions. If you can master yourself, you will get where you need to be. Okay? Cannot stress that enough. Number 6, without risk management, you're doomed to fail. I'd say doomed to fail. You will fail. You will absolutely not make it in trading if you don't respect your risk management. I cannot put it simply. You can have the best strategy in the world with the best win rate, and as you know my opinion on win rate, it's not that important. It's fairly irrelevant. You can have the best win rate, the best strategy. You still won't make money if you're not managing your risk accordingly. Okay, so if you're skewing risk and risking different risk amounts and all of this, it's not going to happen for you. You're gonna have maybe some big months, but then you have some even bigger losing months as well. There'll be no consistency, and you won't have that consistent P&L every month, every quarter, every year. Okay, you've got to lock in on risk management. Otherwise, you'll be in the same position now as you will in 5 years' time. Okay, you have to respect it. You have to be disciplined with it, and you have to stop breaking promises. Okay. Number 7. Win rate is irrelevant. I've just kind of touched on this. Win rate is irrelevant in my opinion. For me, a lot of you know, the minimum trade I will take risk to reward is a 1 to 3, so 3% targets. Most targets I take 3%, 3.5%, 4%, somewhere between 3 and 4% typically for the initial position. That obviously doesn't include scalings later in the trade. So with a risk to reward like that, my win rate could be as low as 30, 35, 40%. But that doesn't mean that you're not making a lot. It means you can make a huge amount still. Because if I can take 4 trades and 3 of them are losers, yes, that is that's a 3% loss. But if that one winning trade is a 5, 6, 7, 8% scaled in swing trade, then I'm laughing. So win rate is irrelevant. It really, really is, and it takes the emotional strain, the emotional pressure off when you have losing trades. Because I know. I could have 3 losing trades, and I'm only 1 trade away from being break even. And that winning trade a lot of the time will be scaled in on as well. So actually, it's not just bringing me back to break even; it's bringing me into profit. So it's you have to respect your risk reward. I don't take anything less than a 1 to 3. It's a non-negotiable for me as part of my strategy, part of my edge. Number 8, never marry a bias. You've always got to come in egoless into trading. You have to. The markets will be random at times. They will constantly change at times. You have to be adaptable. If you are marrying a bias and you're adamant something's going to happen, when it inevitably doesn't, if you're still trying to trade that same direction your bias is in, you're going to get smoked every time. And you're going to end up taking 2, 3, 4, 5 losses before hopefully you bloody realise that drop the ego. You're not going to be right every time. You might not be right every 2 times, 3 times. Drop the ego. If you see changes of the higher time frame structures, you see changes of bias on the higher time frames where it's trustworthy and respected, you need to then either sit on your hands or you need to change your bias and reevaluate and step back and go, hang on a minute, I'm fucking wrong here. That's okay. You're going to be wrong a lot of the time, but this is when it comes to, as I said, risk to reward and all that stuff. That's what brings you profitability. Number 9, no into pressure advantage. This comes down to scalings, and this is what gives me my high profitability. So again, when I have that winning trade, when that area of interest has been respected, when the trade is playing out and we're doing really, really well, that is then when I will scale in appropriately. And that is then when I squeeze every percentage gain I can out of every single trade. So those initial targets of 3% or 3.5%, they suddenly become a 4.5% trade, a 5.5% trade, a 6% trade. And as I said earlier, if you're making 3 to 5% a month, you're laughing. So these big trades allow for buffers of losers and allows for those 1% losses without eating into your P&L too much. And number 10, nothing substitutes for time. Like anything in life, as long as you try your absolute best and you turn up every day, every week, every month, don't break promises to yourself, you stay true to your strategy, you do the hard work, you find your edge, you do the back-tested data of tens and tens of years, and with time, you'll get there. Guaranteed, like anything in life. But a lot of people think they can get success in trading quickly, or overnight, or within a year, or within 2 years, or within 3 years, because the barrier to entry is so low. But it doesn't mean you're going to be successful in a quick amount of time. Just because you can start trading quickly doesn't mean you're going to find any form of long-term consistency or success. So stay disciplined. With time, you'll get there if you're doing the right decisions and actions every week, every day, every month, every quarter. Okay, so guys, I hope that helps. Just a change of style of video, as I said. Some major lessons. The sooner you can learn all of these, if you're inconsistently profitable at the moment, the better these will serve you, I promise you. And any mentorship or you want to see my swing trading strategy, link is below. Take care, guys, and I'll see you on the next one.